Good afternoon, everyone. Good to see you all today. Welcome to the PivotBoss Trading Room. This is the monthly outlook for August 2018, and I am Frank Ochoa, aka PivotBoss. Thank you for joining me here today. I'm just taking a look at several key stocks and indexes and futures contracts here. Going to be looking at several scans and looking for actively prospecting for opportunities that may present themselves in the next course of the few weeks, right? Throughout the course of August and heading into September. This is a really cool special one here just because we had an FOMC statement today and the Fed interest rate decision, which gave us FOMC key levels. These key levels are very important because, again, the market uses that information, whatever it gleaned from the statement and the the change or non-change of the interest rate, and from there it makes a move again heading into the next 6 week statement from now, for 6 weeks from now when we see the next statement. So for the most part, today beginning the first new trading day of the new month, it's basically the last month of summer, and then again some trickle over effect into September. But for the most part, this month right here with the last bit of earnings, things could still see a little bit more volatility before they quiet down. We see right now I'm showing Tesla at the moment, and Tesla showing some wild volatility, 290 being the low down there. And then it bounced and rallied as high as 317.45. 317.45. So earlier today we were talking about how high could it go if it were to push above 300. And our idea was basically my idea was 320 to 330, 320 to 328, somewhere in that zone. And Scott mentioned 318 was his idea, and it gets to 317.45. So again, a lot of great traders in the room, a lot of great trading ideas come out of the room, and that was one where we had a pretty good idea collectively. But even then, 318 and we get 317.45 on the pop. It's not bad at all. If you look at this on a higher time frame basis, so daily bars. Actually, let's change the template here. Let's use the white background. Been getting lots of requests for white background lately, so let's do that. What you'll notice here with this one is the 290 level is very, very important. So I mark it right here as a key level. It's been a solid level to trade against for a long time. We did get below it one time here, but we got to push right back to it on the impulse move, chopped around it, rallied, came back to it. So 290 has been very, very strong. So right now, we're trading 312 at the moment right here in after hours. But the low was off of 290 before it rallied up to that level, 317s, right? So that 290 again showing to be very, very important. And what I mentioned today was, while my one-day target for Tesla is between 320 and 330, and right now it's gotten to 1745, 18, whatever it was. I think the longer-term target still has between 350 and 360, and that target may take the better part of about 2 to 3 weeks. So I think this one still has more upside, and I'll tell you why. And it's something we talk about in our trading room quite often, and it's all based off of market structure. These stocks will basically create clear trading ranges, clear market structure, will stay within that structure, very measured, very specific ranges. And at times it'll compartmentalize that trading as well, as it did here. But for the most part, 290 is the bottom of the structure, and for the most part 360 is the top of the structure. There may be a little excesses at times, sometimes a little bit less, but for the most part that's the structure. And so to come back above it here we also called that it had a good shot to rally to 360, and it did. And when it started to fail here, we mentioned it had a good shot to try back to 290, all because of market structure. And now, this low was a pretty decent rejection, but it wasn't done. Hit with some bad news in here. Now earnings. But for the most part, 290 is holding. And as such, the next move is between 350 and 360. Again, the top of the range. That's where the 2 to 3 week move is. Or say by September, by the end of the month. If you look at our tool here, this is our customized ADR targets tool. From that low, assuming that that is a low, I've been getting that with toss here the last couple of days. That's not fun. Let's see here. You see this low right there? That's the low of the current month. If we assume that that remains the low, then this measures average price movement over the last X amount of months. In this case, I'm using a 10-month calculation. So from that low, this right here is your 100% of average move. This is your 75% of average move. That is a good target here to reach, a good target zone. I call it the high probability target zone. 337.32 to 352.09. That's a good zone. So overall, good bounce here today. We were talking about 300s. Can price push above 300? Can it close above 300? We talked about various strategies from selling puts to buying verticals. So this one has a really good shot, I think, to continue higher toward the upper end of the range over the course of the month. 290 is where this thing would fail. You know, if this thing pulls back and breaks through 290, it's a pretty hard fall. You have 272.5 and 244.50 down below. Those are the next two major lows. But 272 would be significant if it were to try and break that again. That's just a big time level. So we'll keep an eye on Tesla, but it's been fantastic the way this one has pushed through the 300s as expected, hitting a high very close to our target earlier, getting to 1745, very close to our 18 to 20 zone, and as high as 25 to 30, right? 330, somewhere in that zone. So very nice little pop here. Another one that's been really good here is Apple. Let's go ahead and get to Apple here. You can see Apple with a big day up. Closing the day, I think right now even after hours at 201.78. But it's a pretty strong day up. And I mentioned to our group here, and this is going to be one that you're going to really want to pay attention to because it could be a major mover throughout the month. This has the look and feel. If you put this anywhere else in the calendar year, I'd probably be much more gung-ho about it, you know, being that it's right in the middle of August or beginning of August, right in the middle of summer. You know, there's a tendency to think it could go sideways, but I think this one is on the verge of a major move. It's gotten a breakout with a gap out of range and value. The previous 2 to 3 months were spent compressing in this manner. Very tight compression, and now we're seeing a significant breakout and rally to the upside via the gap. That's a huge move. That's a significant move, and it's only the beginning of what could be much more strength ahead over the next month. I believe that this stock could rally, and it could rally all the way to the end of the month, getting somewhere between 209 and 213 at the very least. I think it could exceed that as well. I've been looking at a 200 to 210 spread. I've been looking at just being in the money and just seeing how far it can go. So buying the in the money 195s for both August and September expirations. A lot of different ways to go here, but for the most part, a very big move. Anytime you see this, and again, a lot of my experience comes in data mining, various types of patterns, various types of just price action that you'll see whether it's wide range, narrow range structures, gaps, all kinds of other different types of patterns. But for the most part, this type of behavior, whenever you see a compression of this magnitude and then you see expansion of this magnitude, it's usually followed by continuation as well. And that continuation again could be very, very vertical, and it could do something like that. So again, the entire month could be very powerful. And then if you wait 1 to 3 months out, it may be even higher 3 months out. You know, it may go sideways for a period, sideways to down, and then continue. But anytime you have energy that builds up for basically 3 months, this is May, June, July, and then the 1st of August it breaks out, there's a tendency to see 3 months of energy released. So again, this could be huge. If you want to look at something else with regards to, let's bring this up over here. I'm going to bring up a different platform. There we go. With this platform, what you'll notice here is seasonality. So what I'm going to do is I'm going to add more data here and populate the seasonality down below. Alright, so we're coming into a major point of strength in the seasonal cycle for Apple. So if you look down here at the very bottom, what you'll see is numbers. This is for the quarter, QTR, and this is month, right? And so this is January 2017. So this is Q1, Q2, Q3, Q4. Q1, Q2, Q3, that's where we are. Q3 tends to be the biggest quarter of the year. A close second is Q1. The other two are more congestive phases, digestion phases. So right here with this snapshot, what you see is that there is much more strength that could be ahead. Right here alone, you know, this starts in July, so we're basically 1 month with a rally up off the 185s. You know, we've almost gone basically 10% from those lows, and you know, very soon. But for the most part, this has much more energy. And again, here is August. August, a very strong month, almost 4% by itself, and that's followed by kind of a quiet, unchanged to down September. But for the most part, August, seasonally speaking, right, historically speaking, season over season, has a very strong August and July and Q3 in general, and that's what we're seeing right now. We're seeing a pretty strong rally already in Q3, which began in July. So for the most part, pretty strong move. Look at where we are also with regards to the PivotBoss bands, which are VWAP bands, R1, R2, R3, third standard deviation above. Big gap above there, and these are going to start turning up to provide support. It is my belief that August will be straight up, or at least has the potential to be straight up, as long as price remains above 195. Holding above 195 keeps this thing going up. We could be looking at 215, 220 by the end of the month. You know, it could be easy. So I don't normally kind of pound the drums about an opportunity, but there are times where everything lines up, and those are the times where, you know, it makes much more sense to be more aggressive, to be able to lean in a little bit more to a trade while still maintaining your proper risk management at all times. So this is a great opportunity. That's Apple. Amazon, I wanted to show this one here. Amazon has been fantastic. This one has been a bullish trending market for quite a while, and it has been non-stop. It's been extremely bullish. Those in my trading room know exactly why I'm so bullish this one. I could go over a number of reasons, but for the most part, this one continues to go higher. We had a long on it on this day here at about 1795. Sold the 1800 puts, and again, was in it on the move higher here. So this was an incredible push higher, but it reached our 1800 to 1860 vertical call spread as well, and that move was done. And then I mentioned to our group that because of the trend and because of the nature of how this one tends to move, it would not surprise me if we take out this low. And if we take out the low, watch for signs of rejection, because if we see rejection, especially off the 1760s, we could be looking at another buy opportunity that takes us to 1900. So 1900 right there. Again, this one may be ready, or it may need another few days to build out. But I think above 1800 starts to work to 1900 this time. And while I don't know if we go beyond it, we could just come right back on down. This is Amazon. It continues to crush it. And you can lean on LVNs like this in an upward trending market. That is the most appropriate area for responsive bulls to the trend to defend, and from there you look to return it to a reasonable area that offers profit objectives. And in this case, again, using the low of the month, which is where that green dotted line is. That might not be the low. We could take it out tomorrow and fail and come back. But from that low, we get a pretty rough estimate on where price could head. 1906 to 1950, based off of average monthly movement over the last 10 months. So again, that can easily put us into that 1900 target if this were to work out. So again, Amazon been one that's been pretty strong. The trend has been just nonstop to the upside. Traded it on this last go round right here. Tried to get into it a couple different ways. Didn't get filled on the vertical, but for the most part, great move. Over here, this is another opportunity, again, to look for the same type of behavior. What I'll be looking for tomorrow is if price drops below the current session's low, today's low, and then if it's able to pop back above, because if it can reject that low, that could be an entry for a shot at 1875 to 1900. That's going to be the idea. So Amazon is another good one that's building out. I also wanted to talk Netflix. I wanted to talk Netflix here. This is one that has broken down significantly here recently, but it has been a beast to the upside. This is one that may be on the verge of a turnaround, perhaps, if a couple of things play out. But what we're looking at here is the 340 level. That's the most important level right there. We have 383 here, 420 there. Down below is 285. And those are the most important levels. You also have the 240, or if you want to be specific, the 236. Those are the most important levels on the board. And this one, as I mentioned to our traders in the trading room, trades really well in its market, within its market structure. I mean, it really adheres to market structure principles. And then when you see something go bid through a zone like this very quickly and goes 2 zones over, it usually comes back and fills it back in. And then what usually happens is price will turn back around and go back up within the range, back to the prior high, and then perhaps come back down again and trade within the range, because it failed to do it here, so it has to now do it. Similar to here, similar to there, similar to here, right? So in this case, 340 has been the big level for us to watch. I mentioned before, if it drops into that level, it can drop below it as long as it eventually rejects prices below it and it starts higher. Well, it's starting to show signs of that in the intraday time frames. Nothing huge yet. But if you look here at, say, the 512 tick chart, what you'll notice here is a rounded excuse me, is a rounded bottom. Rounded bottom with 344 as clear resistance. That type of rounded bottom draw a little better there. There you go, right there. With this LVN here, it has a lot of energy. This has a significant amount of energy. And the rounded nature usually lends itself to break into the upside. And again, based off of the algorithms that we built that studied decades and decades and decades of data in all time frames, it was this pattern that tested the best of everything because of many factors that I can get into, including the amount of time it takes to build the pattern, to the amount of compression that type of pattern sees, to the participants and where they are getting into and starting to become stuck in those trades. So all these different factors line up, and that's why it's such a great pattern. So with Netflix, keep an eye on 344 because above it opens up a quick run to 68 up here. So above 44 could open up 68, and it could open up a move even higher, as high as say 375 to 380. 375 to 380. So let's look at that over here for a moment. Usually I stay in the daily time frame, but I wanted to show some intraday as well. You can see right here, this is the rounded bottom as we just saw it. 344 is there. 344 is also that low. It's also this change of bias here. So 344 is a big time level, and it's rounding off below it. If it pops up, here's the 368 level that I just mentioned. I said that's a gimme level. But again, 380 is the bottom of the prior price structure, and 340 is the bottom here. So it's really 340 to 380. So usually you get the move all the way to about 380. I would call it 375 to 380. And if we look at, again, based off the low of the month and we project higher, we can project 374 to 387 as the primary target zone. So again, this is a great opportunity that's building out. I mentioned several things have to work out, including price breaking above 344 and holding. So one of the ideas that I was looking at with regards to engaging that opportunity was looking at either selling a put credit spread, like selling the 350 for example, or perhaps buying a vertical, buying an out of the money 350 or 345, slightly out of the money, and then selling something a little bit higher, like a 370 or 380. So those are a couple of ideas right now that I'm looking at, but again, this one is more based on the ability to push through 344. That opens up a move back up. So keeping an eye on Netflix. So some pretty big ones right now that we've covered here: Amazon, Apple, Netflix, Tesla. Win right now is seeing a huge drop after hours. So this one for the moment bouncing off about 144s. So 144 is not even on this chart. Here's 144. It's about right here. Where that little peak is 144. That's where we got, let's see, 144.55. So yep, that's basically right at that peak, and that's where it got to. And right now it's at 149, which is competing here with this prior pivot low. So here's what it looks like. Big drop, big move down. This was an earnings miss, 153 versus 209. Again, I'm on record here saying just earlier in the week that you know, the 160 level is significant. It's a significant level, and I have no reason to believe that they won't beat. Win constantly beats at their earnings estimates. They're constantly winning. But what changed was Caesars Entertainment earlier. That one went halted several times throughout the day. News came out on that. Market dropped significantly. Every single And look, I'll show you right here. Again, I'll bring over Visual Trader, which is very handy for this type of work. But over here, you see it says casino and resorts. I have 5 in that group that come up. And there you go. And another thing we can do, for example, let's bring symbols. All right, there we go. This is kind of representative of the S&P right here. For the most part, this thing, you know, these casinos have either gone up or sideways to up until recently, when things have really started to falter, and these have dropped. When, again in January with those allegations, big drop back to value. It continued higher until it hit those highs and then dropped hard again. And right now we're putting in new lows. But today, if you look at MGM, big drop. If you look at Caesars Entertainment, down 14.6%, down 10.8%, down 5% for Boyd Gaming. Las Vegas Sands down 4%, 4.10% right now. In Win at the moment, actually down more than that, I guess, with after hours. So a lot of these got hit hard. And if you look at the 5-minute chart, it started early and they were going, so somebody knew something ahead of time. It's very clear, especially with this miss. But look at this, right from the opening bell, Boyd Gaming is sold, Las Vegas Sands sold, Win sold. These are 5-minute charts. Every bar is 5 minutes. Sold. Here's MGM sold. By the same token, that wasn't happening, you know, so much over here until a little bit later. These topped out at 9:45, but by then, these others had already been selling off quite a bit by then. So it was coordinated selling early on, and look at the signatures left behind. I call it a signature. It looks very similar. These programs are designed to sell, and you see the same type of waves in the price action. And so, you know, all these basket selling as well. So they all took a hit. Caesars probably the biggest of all. Huge move. Again, they had to halt it several times today. That one's down 15%. So you know, there's something's up with this group right now, and it's one of those that tends to perform quite well. I've traded Win many times, but right now, lots of headline risk, missed earnings, and it's just getting hit hard right now. So big time weakness out of that one. All right, let's bring this back over this way. All right, so I wanted to bring up some of these futures for a moment and look at some longer time frame charts. Here is crude oil. Crude oil right now on the weekly time frame has been trending up very nicely. It's at the lower end of its range for the most part. It continues to hold above 62s. So as long as we're above 62, we're in a market structure up, but we're kind of at the center of that range. So again, we talked about market structure earlier. Crude oil honors market structure very well. You know, here's prior market structure about right there. This and this and this. It got below here. Traded in there for a long time. Did its little thing here, and now it's trading above it. So from here to here, we have a great big move, and we're right at the center. Again, as long as we hold above this level, which is 62s, you know, this thing continues pointing higher. We have 87s as the next major upside target based off of this key range here. So 87s would be the next upside target. So when you're looking out farther out, I mean, you can definitely see a good case for strength down the road. When you look at things closer in, near term, you know, it's tried to go up and it just hasn't. It almost feels like it needs a flush, a run of the stops to the downside in order to help open up some of the upside and get the thing moving higher. But again, here is the key range that we were focusing in on the weekly. It's this move down, the rally up, the pullback to this key range midpoint. Those key levels 75.27, 69.34, 63.41. Those are the key levels right there, and we're kind of coiling around the middle. The best area to buy would be down here around 60, 62, 63s for a shot at returning higher and maybe at some point driving this thing up. Also above recent highs here would be pretty strong stuff. It's about 71s. That could open up at least a retest of these highs. So overall, this market has been very strong. Hasn't really wanted to bounce much lately, but is getting there. Alright, what I'm going to do right now is I'm going to bring up a couple of scans for some rejections. I typically like to bring up buy candidates and sell candidates and see how many of each are there, of each one. If there's a tendency to be a lot of, say, buy wicks, that could tell us something like a lot of markets are rejecting, or perhaps we're about to see a big reversal up. Same thing if there's a lot of sells versus the buys. Right now, there's quite a bit of sell candidate or buy candidates. Let's see, which one is this one? Let me make sure I got the right one there. Okay, got it. All right. So right now there's quite a bit of buy candidates, or at least buy signals. I usually say that it's mostly about where in the chart that this thing is forming. I usually like it to form near support or down at a low or a failed new low within an uptrending market. This is a failed new low within an uptrending market. It is looking good. This one continues to look pretty strong. Maybe looking for a gap fill ahead. It's not my ideal candidate. I'm just going to go ahead and flip through a few of these here. Big gap up for Molina Healthcare. CLR. Now CLR is one that, you know, I've gotten in early on some moves and it's been really, really nice. You know, one of the recent ones was during this move up. And it right now reminds me a lot of that move right here. You can see, you know, this one kind of coiled up, kind of like this, and eventually released. And right now we're coiling up, kind of like this. And I think we're on the verge of releasing. We have earnings coming up on this one. 8.7. I think this is one that could be a solid candidate for continuation to the upside. Now earnings, it's gapped down on this earnings. Over here it gapped down. Over here was a modest gap up. And then one before it was kind of a gap up. So not a whole lot either way, but mostly damaging to the downside. So perhaps in this case I may do some sort of vertical. But in most cases, when I see a range like this, or some range that may be rounding off, and then you see a rejection like this, failed new low below multiple day lows, that tells me usually we're about to see a forceful move in the opposite direction. So if that's the case, most often I may be a little bit more aggressive, like using in the money delta 70 options, right? So you're looking for delta 70 in the money. Could be very, very nice. Again, we do have earnings coming up, and that's the only thing where once you have earnings like that, you may want to be a little bit more protected. So in something like that, maybe doing something like, you know, an out of the money vertical call spread. That could be a way to go. So this one is a really, really good one right here. That's CLR. That's going to go on the watch list for our traders in the room. right there. So that's a really good one right here that we'll engage. DTE is next. This one's been pretty strong here. This one's rallied really nicely. This one's also been in and out of our list lately. A nice rally and pullback here. Again, right into the high intensity trigger zone. That could spark another great move up. For those of you that like to trade a short-term 3 to 5 day bounce, 5 to 7 day move, this might be something to engage here. DTE, not a bad one. I'm going to keep on going though. EIX, again, one of those that could be gearing up for a much bigger move. The weekly time frame showing quite a bit of compression at these lows. Again, if it starts to break up above recent highs, 68, 69, this thing could go. I could see a short-term 3 to 5 day bounce also on this one, perhaps up to 70 to 71.50. But again, I'm going to keep on going here, see what else we have. RTY and IWN. So here's RTY. I told our traders today that RTY might be signaling an early rally to come, especially if this thing starts to pop above the 1680s. But here's the FOMC key level right here, 1664.5. That's today's 1 o'clock open price Central Time when the FOMC statement came out and the federal interest rate decision was known. Price left a tail off that end and pushed higher. You can see 3-day highs here at 1680. Above that level could open up quite a bit of upside. It's been going sideways for a while now. I thought it had a shot to go here and it failed. This looks even more promising. A gift would be a drop into 1620 into that LVN. That would be a gift for bulls. I hope price drops lower into 1620 because that is a fantastic market structure buy zone off the CLVN, off the previous low, on top of the prior highs. All of that makes for a great move right back toward prior highs. It could be a 100 handle move from 1620 to 1720. So that's really, really nice. Right now we're right at the center of that. And so it's hard when you're at the center of this structure right around the HVN because there's no real value there. But you know that at some point down the road, 3 weeks down the road, this thing could have broken out and continued higher. So timing is an issue sometimes, but it looks like it's getting close, and above 1680 could open it up. So that's a little backstory here with RTY, and if you look at IWM, that's the Russell 2000 ETF. You have a failed new low. Look at this failed new low. It took out 1, 2, 3 day lows. Plus it took out 3 week lows and back up. Here's the LVN. Again, is this thing ready to go? Are we about to see a nice move up? I think so. We have a nice key range here that needs to be. This is IWN. Usually we're looking at IWM. That's why I don't have any markings on it. So what I'm going to do right here is I'm going to mark it up real quick. What I do to put a key range on is I grab this high right here, 131.46, right click, come over here and add a Fibonacci extension, drop it down to the prior low. That's 116.72. Bring it back up to the midpoint, which is 124.09, and I drop it on the day where that level is hit. That is right there. Now that's my key range. Now you'll notice though when I bring this up and I bring up the parameters for it, these are not Fibonacci parameters. So I use the tool, but I put my own levels in, and I do it. I mark it off in quarters. You know, 25%, 50%, 75%, 100%, 150%, etc. And it makes for much easier math and understanding where things are going. So when you look at this, that's now our key range. We've gotten our upside break, and here it held twice. It held here, here, and now on this pullback, you know, it's attempting to hold. That's why I said if it gets down a little bit lower, that would be a gift. Now, what happens if it were to break up? If it were to break up, look at this here. This thing could rally. Holding onto this high, this thing could rally to 183, 180, 138.83, or as high as 146.20. Again, this is building the energy right now. Even though it's a rounded top, it's building the energy for what could be a big move up. Now, rounded tops and rounded bottoms, very powerful. Rounded bottoms, I think, have much better accuracy. Rounded tops, on the other hand, can look like rounded tops. They can try to go, and then all of a sudden, they're just a continuation pattern. So, you know, while this one looks ominous right now in terms of perhaps showing the potential to drop, I think it is true in the fact that if it were to break below 130 in a quarter or so, you know, things could get pretty hairy back to 124, perhaps as low as the recent pivot low, which is about 118 quarter. So we could be looking at quite a bit of weakness in that case. I think for right now, this thing is forecasting up. In this case, again, with a multi-low, failed new low, this could be an in-the-money idea with a 70 delta on it. For the most part, when you're in a range like this, I like to give a little more time. And so there's 16 days out to the August expiration. September is 51 days out. That would be much better in this case. The 130 is about a 68. So the 130 is a 68 delta. And so right now that one could be it, the 130, right? In the money, and seeing how much it might run over time, letting it go. And if price were to close below that level, that would be an out. I mean, I think if price were to come back to it, it could be an add point. So that's just a really good one right here that's building up energy. I think it has a really good shot to move at some point here down the road, in addition to RTY. So both of those are on the watch list as well for our traders. We keep on going through the list a little bit here. Starbucks getting back above 50. And I just wanted to do kind of a live prospecting as well. A lot of times I come to the monthly outlook with some predetermined candidates already and then just kind of flip through. But this also kind of shows the live process of just what's going on here. You know, there's some good candidates that pop up that I might just pass on because there might be something better along the lines of what I'm looking for. Because I know that when there's certain combinations of things, you know, the odds are really, really good. And so when I try to stay focused on finding those opportunities. And then I also like to look at the opposite side as well. So not just the buy side. You know, flip it over to the sell side and see how many candidates are there. And not surprisingly, there's about half and half. Quite a number of buy side, quite a number of sell side. CRM here with a failed new high and a down move. This one could be a really good short. See, for something like this, you see how aggressive it's been going up? It can be tempting to sell it because, again, while it may go down, it could be short-lived if you don't take profits, and then all of a sudden we're squeezing. In this case, price closed the month below the upcoming month's pivot range, which is the current month's pivot range. The market rallied into it and rejected out off of it here to begin the month. That's what I call a change of bias. That's a higher value with a change of bias. And so far it's been rejected. So normally in that circumstance, you would drive down to at least break the low of the previous month. So that's at least breaking the low and drive down one more leg. So again, this could be one of those that if you take an opportunity like this, know that you have 3 to 4 good days that might happen, and then you got to get out, because you know this market has been mostly up, you know, and markets tend to go mostly up, and so you have to just know that you're counter trend. But this one is a good, eventually breaking back above 142 is going to get this market going higher. So that's CRM. Oh, HTHT. Let's take a look at that one. HTHT. Yeah, it didn't do it. HTHT. So right now, this one had been a very strong stock from $6 all the way to 50. It's kind of got a trend channel type of thing going on. Good question here. Looks good to short, or maybe that wasn't a question. I think that was more of a statement. And I think that is a very good level. You have, you know, again, I always look at price right off the bat, price and volume. Then I use my tools to kind of home in on additional things. But 42 is a big level. Right here, you have like 31 in here. And then there's kind of a mid-level, you know, 36. So something like that. Maybe it's 41. You know, 41, 36, 31, whatever that is. Something like that. And this market took off from here and here. It took off up there. So again, holding right here and starting to fail, I do think that there is more downside for this one that could take you at least to 36. At least down to 36. It would need to really pop back above 42 to make this thing go higher. It's just been very heavy. Very heavy. Additionally, you see a lower value. So that's the pivot range. Here's the pivot range, lower value. And so when that happens, already there's programs designed to sell that market when it gets there. So whenever it does bounce, or should it bounce into that level, it's already going to face selling pressure, just like this one here, right? This was higher value, but the close was below it. So they flip it and say, okay, well, if it goes, then we sell it. And they're designed to sell. The other side is here. They designed to buy. So, you know, they base a lot of it off that range. So again, I could definitely see that staying below 42s. This has lower levels into 36. And then from there, who knows? It could stay inside 36 to 42, or you can drop here. But yeah, that's just a little bit of analysis on HTHT. Sometimes I have a really good feel about something. This one is one of those times where I can definitely see it. It's just I'm not familiar with its price action enough to really have a great bias. Let's see, we also had a couple that we were looking at here. This is FBHS. We've been looking at this one in the trading room. This one is back toward major support. You can see the support level right here. That's about 53. Big time support, major level. The last time it spent a lot of time at this level, it built up enough energy to rally all the way to 73. And right now it's building up the same type of energy. It's the same size range. It may not be ready just yet, but you can see again, rounded bottom, takes a lot of time, releases a lot of energy. This one, is it almost done? Is it midway done? Is it just going to start running already through 59 or something? So this one is in that zone. I thought it might have a better opportunity to run here. I think if the broader market were a little healthier, this one might be a full go. But I'm keeping this one on the radar. I think above 59 could open up a return back as high as 70 to 73. So this one could be a pretty solid mover down the road. We're also looking at GoDaddy. GoDaddy was a buy for us yesterday. Oh, you forgot the question mark. All right. I just thought you were very confident and was sharing. But either way, thank you for sharing that stock. Here is GoDaddy. This one right here is a very solid trending stock as well. This one's one that we've had as a buy candidate many times over the last year. One of the most recent was right here. That was a buy for us, and it just took off. We were looking for any pullback to be another buy as well. That thing rallied. Right now, impulse sell-off, very nice sell-off here. We got ourselves another rejection tail, and again, that one is one that we called long yesterday and mentioned that this one could see a pretty good bounce back up. And while this is a key range, you know, at some point this bullish move has to end, but you know, do we get a push through 80, or does it just kind of hit 80 and fall back? I don't know, but I do think we have a good shot to get through to the 80 zone. So based off of, you know, the low of the month here, you have 78.92 to 80.75 as a good spot to shoot for. In this case, price needs to stay basically above that midpoint, which is about 73. So it needs to stay on a daily basis above that zone. So very nice continuation out of that one overall. But not bad. Not bad. Several good candidates here to look out for. Again, we didn't get to a whole lot of futures contracts, but a lot of stocks. So just a couple of futures contracts, and then we'll finish up. Gold is one that, for the most part, is coiling up over the last 10 days or so. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. It built out a key range yesterday. It's taken the FOMC key level offered so far. This one has not hit major support just yet. And I've been hesitant to call this one long over the long term until it can get above 1240. So here's 1240 right there. Here's recent support, right? I got 1200 here. The bottom of the key range is 1204, right? So that's a zone where I think we need to get to before we might see meaningful support. We certainly saw a good try at it here. It tried. We noted that it was trying. I actually called in our room a long 1220 to 1240 idea, but that was it. You know, you didn't see much more beyond 1240. You can see the resistance. So this is quite a bit of compression, and from compression usually comes expansion. Very similar to this, right? Where price compresses and then it sees that major release of energy. And so are we going to see it down and then up? I think that could be very well the case. I think we could certainly see a big drop down. We could test prices between 1190 and 1200, and then if we see some sort of rejection off the zone, we could bounce as high as 1280 to 1300, the top end of this range. We haven't quite gotten there yet when we gave it up here. So again, market structure maintains big time here in GC as well. You know, we've been very, very weary of this bounce. Not just me, but several traders in the room. You know, we've been watching it very closely, and it just doesn't have the juice that you would normally want. And that's the same exact thing that we mentioned back here. It's the same thing we mentioned here, because we were long here. We were long here. I was long there. And then I said, you know what? Things are getting a little heavy here. And then I haven't been long since. So I think the last time was here. So right now it's been a long time coming for a bounce, but it just doesn't appear that it has the juice right now. So I would say keep an eye on this one here, because you know, any failed rally over the next day or so could lead to a quick drop into 1200, maybe as low as 1190. But I think this is going to release some clear energy soon, as indicated by this ADR indicator down below. I wanted to take a look also here at the NQ. The NQ is a tough read right now. I mentioned that in our trading room. It's a tough read. Tech has been very, very strong. It has had a couple of bumps here lately. You know, Netflix is down, for example. If you argue that's tech. But here, that's a really good channel, right? Everybody sees that channel. And it's a self-serving bias kind of until that channel's broken. And that's what I always say. It's the pattern will continue until proven otherwise. And right now, 7,300 is the level to watch short term. 3-day highs at that level. Today holding yesterday's midpoint. You know, if it starts to push through 7,300, I could see a stop run day up. You know, the NQ's been averaging 108 points per day on a 10-day basis. If we see a stop run day, it could be 150% of ADR, 200% of ADR. If it's 200% of ADR, that would be 216 points. You know, that could be a big move. Say the move starts at 72.50. That would be 74.50. It could be a big move. So I'll be watching for that. All right, so if we can get above 7,300, I think there's a good shot to squeeze. It could be as high as 7,400, 7,450 even. And, you know, again, as I usually say, if a market tries to rally and it's up, and then by the end of the day it fails and rejects, look out below, because that's going to spark a major move down. So, you know, nothing says we have to go up. At some point, these trends have to be broken. They don't go on forever. And even if it were to drop a little bit, I still think this would be a phenomenal buy longer term. So even if we were to drop all the way back to 69.65, which is this FOMC key level from January 31st, that is a major market pivot in the charts, a major pivot that's played out throughout the year. Right now, we tried to hold above this pivot high and failed. So at the moment, if we rally, and we rally into that point and we can't get beyond it, that could be the start of a pullback. So for those of you who have a bearish outlook, I'd be watching 73.60. 73.60 is the level. 73.65 maybe even. You know, we might start up here and get a good strong rally, and then if we start to falter up here and leave behind a tail, look out below. I think we hit somewhere into 7,000 to 69.65. And then again, because of that market structure, this would be a phenomenal buy right back up to 73.65. So that's what I'll be looking for here with NQ. How does price respond at 7,300? Can it push through it? Can it maintain acceptance beyond it? If not, we might be looking at another leg down, and that could be significant, at least over a 3 to 5 day period, at which point that auction lower may entice buyers to come in, defend those prices, and then we bounce. And again, that could be somewhere between 69.65 and 7,000. All right, everyone. Well, I'm going to go ahead and call it a session there. Again, thank you very much for hanging out with me this afternoon for our monthly outlook for August 2018. As always, trade well, and I'll see you soon. Take care, folks. Until next time.